Hi everyone, welcome back to the Technical View. It's a great way to look at the markets from a technical analysis point of view, and just to use it to supplement your own points of view or other market research that you might be using. We look at all the world indices, so we're starting in the Americas, going through to Europe, and then to Asia as well. It'll just be really quick, and it's just using the classic technical analysis. What I do personally is I actually use trading systems with solid buy and sell signals in my own personal trading. This is using more classical chart patterns. On the S&P 500, we've got resistance at about 2120, or 2115 to be exact. But look at what we've got here is we've got currently higher peaks and higher troughs. And so that's giving us this great little sort of consolidation pattern here. If it were to break out to the top side, then that would be happy days as far as I'm concerned. Looking for that pattern to fail would be breaking down below 2060, and then the next resistance point is at 2020 on the S&P 500. So nothing too fancy there. If we were to look at it from an Elliott wave point of view, it moves in 5 waves, so we've got 1, 2, 3, 4, and potentially a last wave up, which is usually one of the shorter waves, and it could usually see about 75% to 100% of the previous move. So we might be looking over and above 2160, 2170 if it does break out to the upside on the S&P 500. Moving out into Europe and just the FTSE, looking at the FTSE really quickly, clearly this one, and again, these trend lines, very simple stuff, but they can be extremely powerful as well. But looking at that, it's obviously still in a downtrend, looking to try and break out. As you can see, it's broken above the trend line, but what I would be personally looking for would be a break above that previous resistance level, or what would now be the previous resistance level. Now that is at about 6445. So really, if it makes a clean break above that, then that would be happy days for the FTSE. Until then, it's sort of still deciding where to go. I have seen these patterns breakouts to the downside, so you could see it move out down that way, and that's why I would usually wait for it to sort of show its hand. So in this consolidation move, so really the FTSE is still in a downtrend, potentially above about 6,450, then that would be happy days on the FTSE. Moving into Asia, and we'll look at the Bombay Stock Exchange and the Shanghai Composite as well. Shanghai Composite in China. So this one is pretty simple, really looking very similar to the FTSE. It's still in a downtrend. It's not really out of the woods yet. And the reason I say that is because even though it has broken above this downtrend here, so it has broken above it, but look at the pattern. So what we're looking at is it's really flat and low. Now, what that means is it's potentially a continuation pattern. So continuation patterns usually break out to the downside. What I'd be looking for under those circumstances would be, it would have to really break below the 3,150 level on the Shanghai Composite for that to be a pattern breaking out to the downside. If it was to be moving to the upside, I'd really just want it to be trading above at least 50 to 61% of its previous move. So what we're looking at around there would be around the 3,600 level to be a decent breakout to the upside. But again, at this stage, it is really currently looking at like a bit of a continuation pattern to the downside. The Bombay Stock Exchange, or the BSE 30, again, looks like a bit of a downtrend for this particular market as well. So we've got a downtrend. What I'm looking at here is an ABC pattern. So ABC, just a little bit of a zigzag, and it's really sort of shot off the bottom there as well, which is quite good. Still resistance at the 27, what do we got, about 27,700 level on the BSE 30, and again, I'd really want this to close above that before any sort of uptrend was really truly called, and maybe make some more higher troughs and higher peaks there as well. Now, last but not least, let's look at my home country, the All Ordinaries in down under Australia. Now, looking at it for this particular year as well, it is still in a downtrend technically. It has been in a downtrend since about May this year. Now, that's not to say that stocks haven't been moving up, and luckily enough, I've still made a profit in my own personal trading. Really, for the All Ordinaries, it's a very similar scenario to those around the world. You know, world markets are in some ways correlated, so that's quite cool. But we've got that downtrend. We've got a little bit of a higher trough here as well. So potentially, I'd be looking for a breakout above 5,400 for if that was going to be an up move. However, if it was going to be a down move, it would be below this level here, so about 5,040, and I'd be just wary of false breakouts as well. We might get a move upwards that comes back inside that range. So that's the range, 5,400 to about 5,050. So that's a quick technical view of the world markets. I hope you've enjoyed using more classical technical analysis. Check out my website for actual trading systems with buy and sell signal rules as well, and how to code them in an awesome program called AmiBroker. That's the sort of stuff that I do in my own personal trading. Stop by the website, swing me a message. Have a great week, guys. Happy trending until we meet again. Bye for now.